Thanks, Jane. So the market tumbles a reminder that August is difficult financially, has been for the past 10 years. Melanie, you've got that part of the financial story.
You know, analysts watch this. There have been patterns, and really so many of these issues have been with us for a while. So why the big impact now? We will explore that this morning, and also why today could be another big day to watch. Joe Krier, president of Krier Wealth Management, joining us to discuss all this. And you said you kind of wanted to start with the not so bad news. We heard all the mayhem, but an analyst said, as you're saying, 08, it's not quite where we were then. There's still liquidity. We don't have a credit crisis, and this is just profit taking, actually.
Yeah, good points all that you just made there. In 08, it was a totally different ball game. You know, the U.S. economy was in free fall. It's not great right now, but it's not in free fall. It's just growing slower than anybody wants it to. We had the banks basically not even trusting each other, which was the scariest thing that happened in that whole crisis. And today, you know, there is money flowing again, although not freely, it is still flowing. So this kind of a sell-off, yeah, there was some panic and it picked up throughout the day yesterday. But I think it was more just sort of a perfect storm of factors coming together than some massive negative news that came out.
We talked about the Asian stocks dropping today. You said as you were coming in, though, things were looking a little better. Will Wall Street follow suit today? And could this be the talks of a double dip recession? We hate to say it.
Yeah, it's a tough call. You know, Asia did get hit pretty hard, as was expected. The European markets, though, were stabilizing here, and particularly the European banks. That was a big part of the problem yesterday, was that the European Central Bank had different people coming out contradicting each other, and the U.S. markets were saying, whoa, wait a minute, these guys don't have their act together. So, you know, today the big thing, as Jane mentioned, is 8:30 is a jobs report, and we need signs that the economy is not slipping into the big double dip here, that it's maybe just a slow patch, as things do often slow down in the summer. Hopefully that's all that's going on here now.
They're predicting about 75,000 jobs created for last month, but we had that same thing going on in June, and it wasn't anywhere close to that. Is there any concern on that this time?
Yeah, there is concerns, and you know, not to put a positive spin on everything, but last month the reason that the jobs number came in so weak was that there was 54,000 city and state government jobs lost. So, you know, when you're talking about city and state governments trying to balance their budgets, well, one way they do that is lay people off, and the private sector is just not strong enough to pick all those people up yet. Hopefully that's coming.
Okay, let's talk about people, 401ks, big investments. They might have heard this yesterday, and you just start to panic. You say don't panic, but there are some strategies you can take.
Yeah, you know, and usually when you have a sell-off that was as big as yesterday's, you'll get some kind of what we call a technical bounce, if not today, next week. You know, I say don't panic and don't get too excited if you do see a bounce. You know, if you're a long-term investor, meaning you've got 20, 30 years to retirement, riding this out is a little better than if you're, you know, on the cusp of retirement and you can't afford an 11th hour loss.
What do you do, though, if you're in that stage of your life?
Well, most retirement plans and investment accounts have a stable investment option, and you can call the 800 number or go on the website and shift money over to what is a fixed rate option and just kind of ride out the turmoil until we're getting better signals on the economy.
All right, Joe Krier, thank you so much. And certainly we'll be watching the jobs numbers that come out today, and you'll probably be back in here sometime next week as well.
Plenty of Wall Street worries to go around tonight, from traders to people with 401ks, following a massive sell-off on the stock market. The Dow plunged 513 points, the worst day for that key index since the financial crisis of 2008. Investors are worried the economy is slipping back into a recession, and when they worry, many other Americans worry too. Rob is joining us now with what a local financial expert has to say. Rob?
Well, Tom, like you said, most analysts will tell you that it doesn't matter where you have your investments, you lost money today. The sell-off wiped out all of the gains the Dow made this year. In fact, it lost 1,300 points in just the last 2 weeks. Nervous applause on Wall Street as the market closed. The country and even some analysts are concerned we may be headed for a new recession. But those may be unfounded fears. So what really led to this panic selling on the market?
I think it's a culmination of lousy investor sentiment due to the debt crisis that was going on in Washington, and then you take that and you throw in revised economic reports that show that the U.S. economy has been slowing down more than we thought. Pile on top of that some European debt issues that surfaced again today. They've been with us all year.
If you own a 401k or other investments in the stock market, Krier and other analysts suggest you do nothing, ride it out. But it doesn't mean you shouldn't keep your eyes on the market.
Everybody really needs to be concerned. You know, the stock market sold off, the bond market held up well. People that are approaching retirement need to be a little more conservative here, and the stock market is just too volatile of a place to have too much of your hard-earned dollars invested in right now.
Krier says you should look at the stocks you bought, and if they've done well over the past 10 years, it's best to keep them because the market will recover. Some investors learned from the last big sell-off in 08, selling right now may hurt later. Now, some will tell you buy now, but Krier says he wouldn't buy more stocks right now because the sell-off is still fresh and you want to watch the market to see where it's going. An unfavorable jobs report due out tomorrow may spook the market even more.